All right, so indicators. What do I use? Indicators and drawing tools. Which ones do I use? I'm not affiliated or sponsored by Chart Prime, but I found that their indicator suite has worked very fucking well for me. It's corny, but it talks to me. This thing here is like really fucking good. It's a paid indicator suite, so my strategy uses the paid indicator suite, but at the same time, I don't mind paying because first thing I do every month is set up an account to make trades, or I might even have one open if it's like really up in the green. Pay for the things that I need to pay for to make money. Like a carpenter is only as good, well, I shouldn't say as good as his tools, but he's limited. Like if you're a serious carpenter, you're gonna have good tools, right? You're gonna pay for the fucking good tools. Sure, you can get by with just all the free shit, but if you're serious and you really want to produce, you're gonna give yourself that advantage. And that's what I found with this indicator suite. I've tried a few of them. I've tried Easy Algo, the MDX Algo suite, and Lux Algo. They were all okay. Not that they sucked, but the advantage of this one indicator has 3 indicators built into one, which I really like. And not only that, it has really good confluence when a reversal is happening. So I'll have the link in the description to their site. Again, I'm not promoting or affiliated, sponsored by them. It's not a referral link. It's literally the shit that I fucking use to make money, and it pays for itself with the trades that I take. So yeah, I highly suggest trying it if you're really serious about trading, and hopefully these videos will convince you as to how good they are. Again, not sponsored by them, but it really fucking works for me. So I'll start off with the basic drawing tools. I'll get a clean chart. I don't know. What's a fucking funny one? I don't know. Rune. RIP Rune. Let's see what it's doing.
Human sounds by floating trees.
Whoa, whoa, whoa. Chill music. Chill. A cool little tidbit. Totally off topic. The music that I'm playing is made by one of my mentors. He's pretty good what he does. So the drawing tools that I use, that you'll see me frequently use, are, again, I'm not going to talk about like what they do, but hopefully at this point you've seen my previous videos, or you know, over time with these examples you'll see me use them and you might pick up on it. But you can watch another YouTube video. I'm sure there's other really good ones explaining it, but I'm trying to keep these as short as possible, and maybe I'll talk about it in the longer one, or the follow-up, the wrap-up video. But I use this religiously, the Fibonacci tool. I like to color code them too, because once it's off screen I know what the levels are. This is sometimes, like, for example, I'll draw it on the daily, but if I want to zoom in to like the 1 hour, that shit's gone, right? So that's how I use it, and I have multiple setups for it. So again, you double click on it, you can set your preferences, but these are the ones that I use, these settings. Screenshot that, pause the video, do whatever, copy that shit. So I have this one, I call it all these. I should remove these. Yes, I don't use these default. I set these 3 are the ones that I use all the time. So Bull has all of them, all the levels, and they're very visible, which can add to visual clutter. Oh yeah, another thing. When you set this up, I highly suggest the default. Let's see, apply default. That's what it looks like at the beginning. It's fucking ugly, man. And the labels are on the left. It's like Prince obstructs it sometimes, and I absolutely hate the background. So I color coded them myself to things that I can recognize. So you could do them different colors if you want. But the settings I recommend taking off. Maybe you want this at the beginning to help you identify, because it matters the direction that you draw it in an uptrend, and when you want to find where it can bounce when it's on a downtrend, bottom to up, and it helps you see that. Conversely, that's identifying a downtrend because the line goes like that. But the settings you want to turn off are the trend line if you're proficient with it enough, the background, fuck that shit, and turn off everything else and have the labels on the right, because you saw what I was showing you, that it gets obstructed by the candles and stuff. So, bold, that's the color scheme that I like. That's going to be you're going to use this a lot, a fucking lot of the time. The music might be loud, a little loud. Another one that I have is, I call it macro, because we'll go to a different chart. Let's go with Brett. Gate IO. Delete 119. I use another one called macro to identify macro levels, and I don't want them to be too visible because it gives you visual clutter. So template macro, it makes them a little transparent with dotted lines, so I know it's the macro level. And they're, you know, like when you zoom in, you can bet that this is a strong level on the 4 hour, because on the daily it's a macro fib pull, right? And you can see how it respects it, like so. These are zones also. These aren't absolute. It's, you can expect reactions within or around the zone. Like, don't get too precise on lines. Like, every line is subjective. The placement, you know, some exchanges have different wicks. So it really is a zone than an absolute bounce area. That's really important to know. So that is the other template that I have. And the last one is, I call ATH. And by ATH, all-time high. So we'll do this. That top to this bottom. I won't explain what it is for yet, but make these examples or make these templates for yourself, or presets. ATH is to see where, when something's an all-time high, you don't know where it's going to react or stop, but the ATH or the 1618 and the 2618 are really good for identifying like when things will slow down. Don't ask me how it fucking works, it just does. It's so crazy. Just get used to looking at those levels without understanding too much of why. It fucking does. That's all you need to know. Okay, so that's the fib tool, my favorite fucking tool. What else do I use? The basic drawing tools like rectangle, but a really, really important one, two important ones, is the position drawings and the anchored VWAP. Anchored VWAP is, it's like a moving average of volume, but it's weighted to I guess, the price average or like the price action. So you can use that as another level of confluence because it gives you a support and also acts as resistance. So for example, I'm going to try and find a good example. I haven't cherry picked it, but there you go. Oh, we got to set this up. Why is it fucking drawing it like that? Anyways, remove these. It's a good time to be showing you how to remove these things. So this will be the default. Remove the lower band and the upper band. You just want the VWAP, just the white line. Standard. Everything else can be left standard. Click OK. But you can see how dropping it from the high, we have resistance here, based on volume. Right? We see a lot of volume happening at this point. And if we're testing the underside, you can bet that it's going to reject the first time. It might peek through, but still reject. But it's rare that you find it continuing, especially if it's from a macro high. Right? You can expect it to reject like it did. This is the daily chart, and it rejected off of that. And you want to put these VWAP drops, start on the daily for the macro, and then drill down to the, I'll show you a hack for it after. The 4 hour, if you look at where it was dropped, sometimes the daily candle consists of 6 4-hour candles, right? So when you drop it on the daily, it's not going to get the exact top. Like here, for example, it shows you it dropped it here, not the exact top. So start on the daily, drop it at the top, zoom into the 4 hour, readjust it, and then you want to zoom in the 15, which will look fucking crazy. You'll be like, oh shit, I don't want to keep scrolling all the way to the left. So what you do is you go to probably, yeah, the 4 hour would be good. Look for the date that it happened on. This part's tedious, but you gotta do it. So this happened at the bottom. You can see Sunday, 1st of December at 11. December 1st, 2024, 11 o'clock. So go to, whoa, we're way far. 2024, December, when was it? 1st. Whoops, we want that on the 15. Go to 1st. Was it 11? There we go, see? It lets you go the right way instead of fucking scrolling all the way there. Now you can be pinpoint accurate with the placement of the VWAP. Because it matters, because like I was saying, if it drops it here, it's also taking that shit into account and it skews the accuracy of the top. So you gotta zoom in and drop it at the top and drop another one at the macro low, which is probably, we're gonna ignore this because that probably doesn't show up on, like when you see big wicks, check another chart because it might just be that exchange that played scams. But yeah, be mindful of that. What the fuck? Oh, I have to save this as default. Save as default. Default. Let me check this quickly. Yeah, that's good. I didn't reset my settings. So template, default. So now you have a macro. Well, we didn't zoom in. I won't really need to go too far for that one. See how it sucks, like scrolling all the way if you're on a low time frame? That's why this hack down here, like, ooh, baby. So now we got it dialed in. For example, I'm not going to go to 15, just you get the idea by this point. So we can look and see that we have a macro from the low, a macro from the high. So that is very strong levels of support and resistance, because it takes into account the whole history of the asset. And when you're zoomed in, you can also drop it from local highs and lows. So 4 hour, we'll drop it from here and let's see what that shows. Bro, why are you doing this? I don't have to keep clicking that. What changed? What did I do? So this, if you're scalping short term, you can respect this. But this has a lot more weight because that's macro. This is just local, you can see. So that's how to approach this drawing tool. Oh, come on, bro. I don't fucking get why it's doing that all the time. Hopefully it won't happen to you, but you can already see that we have confluence for this zone. That's why dropping multiple is pretty good, because it gives you confluence, right? So always drop the macro high and low. Color code them if you want so you can identify. That's a thought that I just started entertaining, so I don't have to, which line is this one again? You know, like if you color it green, all-time high, red, all-time low, and then leave the locals as white, just so you can, you know, distinguish. So that's one of the tools that I use. The indicator at the bottom, this is what this video will be majority about, this and this indicator. This is the paid indicator. Again, not sponsored by them, but I highly suggest. Hopefully at the end of the video, this video specifically, you'll understand why I like it, because I'll give you some examples as to how to read it, and then you might be like, holy fuck, like it looks pretty accurate. So this indicator is the RSI on steroids, because it gives you really good indications as to when a reversal is happening. It shows you the strength because it's the money flow. This wavy line's the RSI, that's divergence, and I'll talk about that after. And this is volume. So you can see for something like this, we want to see what a good, like an uptrend, possible reversal indication would look like. We got a bottomed out indicator showing signs of divergence. Divergence meaning that's where this point was. Where the fuck is that shit? There. And then you can already see. That's why divergence with this indicator is your bread and butter. That's what you're going to look for. That's the beginning of what you're going to look for. Because later on, once you become familiar with it, once you get the complete system, like all my ideas are out and you fucking watch all these videos, you'll be able to not only rely on divergence, but this is a good starting point because it has higher probability. It's a little more obvious, easier to identify. But later on, you can see based on different time frames and also psychology is that you can take a position on a support without the oscillator giving you the signs yet, but you can turn it into a scalp. And scalp meaning quick trade, in and out, closing it by the end of the day, closing it in an hour or 2 hours. But as a starting point, we want to only look for this. And this is what I'll be really emphasizing. Divergence. You can see divergence here again, but it failed make a higher high because clearly we're in a downtrend on a 4-hour. You know? And you can see negative money flow. So we can say that this is going to go up, but we're not sure. And we have a good idea that it won't be Valhalla. Right? Why? Confluence. Confluence being we only got one sign. Volume's tapering down. Money flow is exiting, but the strength is coming in. Potentially to make a lower high, which it did. Right? Same thing applies to oversold. We got the signs that divergence is happening. Like, a really good way to look at things objectively without a bias, on the chart, press Alt-I, it flips it upside down. So right now, we see this. We'll identify it here. The box. We want to look at that as if that's a clear sell signal. Why? We'll talk about this after, but like we see a lot of little fucking drawings and symbols there. But if you flip it upside down, would you take the long? Whoops. Wait. Oh, it doesn't flip this chart upside down, or the indicator. That sucks. But anyways, that's this section here. If this was flipped upside down, it would be there. Would you take the long? Yeah, I would. Why? I got a lot of, indications telling me so. So why can't it work for selling as well? That's how you identify your exits with this indicator. And you can see that price went boom, went down, but in this flip chart, it went up. So it's a good way to manage your bias. If you're feeling overly bullish and you just want to take a step back, like, is it my emotions? Is, whatever? Is it my friend telling me to buy this now, and is it really a good time? That's how you can check your bias. So again, looking at these signs, especially divergence, it takes time to play out. But you can be sure it's coming. And again, I'll talk about time frames because you can confirm it on a lower time frame when it's going to happen. So let's draw a box around the cluster or the order block that we want to look at, and then go to the 2-hour. We might get a sign showing us a more accurate exit. Yeah, there you go. Double top, lower high, divergence. It should have printed a divergence. Divergence is when strength does something else than price. It could be bullish, bearish. But typically that's what you want to look for. That's where you want to wait for the reversals. So we got our first reversal overbought here. And we're on the 2-hour. We're like, oh fuck. Zoom out to see what the higher time frame is saying. Because sometimes it can give you a bearish signal, but really the dip is just something small like this, and then the daily is like at the bottom, and it'll just give you it just wants to rip higher, right? That's why it's important to check all time frames. Don't get stuck onto one. But that's going to be for a different video. But the idea is to understand how to read this indicator here. So it gives you lots of fucking confluence, this indicator. I'm getting each one of these prints, the more there are within a cluster or a given area, the stronger the signal is. It builds. The overbought means the strength, the asset is overbought. It doesn't mean it's going to reverse right there. It just means strength is, it's losing itself. The reversal print, which is the triangle, means this is a potential area. Pay attention to this potential reversal. Is it going to be a dump? I don't know. The double arrow shows that it's going to be pretty sharp and that it is coming. It's another level of confluence. Those three together gave us a pretty, decent dip within this time frame, right? You got to understand that it's within the time frame. And then we hit another one right here, overbought. Lower high, and we got that signal. Again, we got divergence, up reversal. Is this a strong one? Not that strong, because you can see money's tapering down. You can still catch its move. You can make money off of it. But is this a big swing? And again, it's the psychology. When you see more confluence, you can up your position size and be more confident. And again, that's the psychology. I'll talk about that again later. But this isn't a very confident, super massive leg up. You know, we don't have that many signs telling us it will. We'll look for those later, but again, this is just how to read what this is. If you go to the 4 hour, the blue dot is what you want to look for. The blue dot signals, hey, a big move within this time frame can be coming. And what did we get on the divergence? We got double divergence, lower high from this high, which is pretty accurate for when things started dipping. So we got that. And let's call it about here. That's a good exit. We got our signs like, oh, this asset is consolidating, but things, this idea of the oscillator looking overbought with tons of fucking confluence. Overbought, potential reversal, the double arrow meaning the move will be sharp, and the blue dot meaning things are looking pretty, you know, it's going to be a big move. And then once things started tapering down, even though it happened here, you're not going to go full clip. You're going to start building something. And I'll talk about that again later in an how do I catch entries video. But you can see when you want to be confident in a long when things are at the bottom. In a short, it's a little different, but you can get signs that a short's going to happen, or like a reversal, a downtrend is going to happen when you're at the top. You can see it went down. We had the signs, volume tapering down. We got our reversal prints. We got divergence. Money flow is stagnant and it's slowly going down. So that's how to read this indicator. It's really simple once you spend the time seeing the pattern. It's a lagging indicator, yes, but this, if you learn how to read it in multiple time frames to preemptively, you know, catch those moves, that's how to use it. Don't use it when it's about to reverse. Use it when it's giving you signs that it's about to show it's going to reverse. That's how you use lagging indicators. You look for the patterns of the signs, not the signs, because that's already too late. Like, for example, if you're looking for it here, you weren't building it. You weren't building that position within this block. That's how it works. You want to build the position. And this is only one level of confluence. I don't know if I would have taken the short there, because that was only based on the indicator. But again, I use a confluence of a bunch of different ones. Like, for example, the VWAP. Let's see what that shows here. Fuck that shit, man. Why does it do this? Default. I gotta figure that out. It's really bothering me. It should be saving. Hopefully you don't have that problem too. Motherfucker. Bro. Save as default. Yes. I'm gonna reload this. Maybe it's a fucking glitch. Yeah, it's fucking drawing them all again with the... I don't know, man. Hopefully it doesn't happen to you, but it's never happened to me. But yeah. Let's try and find an example. I'm cherry picking it, yeah, but I want to give the point, get the point across. There you go. Ooh, hang on. Let's mark this pink. So we'll go back to it. I want to check this out. Look at this. Open list. Back to where we were. See how the VWAP acted as resistance? That's another level of confidence, right? That would have given me idea that this area is resistance. Holy fuck, it's so slow right now. See how it can poke through sometimes, but it respected it as resistance. That's why it's important to have multiple confluences. And this indicator is really good at providing the most accurate results it can produce, right? So that's why I really like this indicator. Again, not sponsored by them, not affiliated. And that's one part of the indicator suite that I use. Another one is market dynamics, which is order blocks. We'll find a good example. So this is a good level of confluence here. Like, why? I'll turn it off. I've got a VWAP. Bro. On. All my drawings have that shit there. Let me see. No sync. Save, please. I don't want to have to keep doing that again. Ay, ay, ay.
You are listening to Cumulus Sounds by Floating Dreams.
Fuck, bro. So annoying. Anyways, sorry you have to witness that. But, turn that off. You can see here on other examples how the VWAP gets respected. Resistance, support, support, reaction zones, right? That's how you look at them. So back to my market dynamics. I have confluence on this level as a bounce zone, because I've got the VWAP here. I've got a bullish order block. How to read these order blocks. This shows the bearishness or bullishness of the order block and the significance or the strength of, I guess, its sentiment. Yellow being neutral, despite it showing more bullish. It has a higher probability of bouncing to the upside, but how strong is that level? Moderate. Despite it being more bullish or bearish. So let's look for a really good one. Let's go 8 hour to get my. This is, for example, this blue one. Look how dominant the bullishness is off of that, and it lines up with a lot of like price action here, acting as support. So that's another level of confluence that I use for confirmation. Same with this level. VWAP bullish order block, despite it being neutral. So what we can expect on things like that is maybe this. But it likes to respect that area. It might go through it. This might be the same thing, but I can expect a better, look at that. That bounce off of this bullish order block produced that. Whereas a red one, where's a good red? Right here. That's a red order block. That's a little cluttered. Look for something else. BNB, I haven't done that. Go to the daily. See how it reacted here? It didn't pierce through. It didn't fully reject the neutral one, despite it being bearish, right? A red one is usually a hard rejection. Blue is a nice bounce, or a nice strong bounce. So this one, I would expect it to be a strong rejection, and I can see that it could be because look at that price action here. Rejected, rejected, support, rejected, boom, rejected. Lots of price action here. Majority of it bullish or bearish, and it's a strong bearish order block. So what you can expect, can, not should, keep that in mind, is this. Might not do that, but that's my thesis. That's what I'm seeing. That's the signs of what this is telling me. And paired with this, and like I said, divergence, right? What does divergence do? Higher high or high, lower high, and it shows that, right? The lines connect together showing that it's a lower high. But price will do this. Go for a higher high, right? And that's when you identify possible short zones or rejection zones, right? That's confluence. We got this. So if we're here, and I feel like I want divergence to print because I know usually that lower high produces a higher high on price. So that's also the psychology, right? That's part of the psychology. Knowing what that does, but you have to make a decision. Are you going to risk it? Or are you going to respect this level, which has shown it being proper reaction zone, rejection, 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 support, 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 rejection, hard rejection, rejection, rejection. Do we reject another time? We don't know yet. But if you stick to your guns and analyze the lower time frames or the higher time frames, you can get your I don't know, what you want to do. It might not be correct, but you can base it off of these ideas, this way of thinking, right? Divergence, again, like I said, we're gonna start off with the divergence, and then later on you can with experience you can identify things without divergence. You can take plays without divergence, but the best way to start is divergence because it has a higher chance of success, the up and down. So that's divergence, lower high on the oscillator, but it always shows you, usually 99% of the time, price will go higher. It's diverging from what the other thing is showing you, hence the word divergence. So for example, this is high time frame. So we see that divergence here. This is another good example. Blue dot, blue dot, blue dot, blue dot. Something's coming. We don't have our full confirmation yet. We can see money is exiting, volume is also tapering, but we're getting our divergence prints. It means pay attention to what's about to happen. And if you look at it at this point, from here, I would have started paying attention here. And if you wanted to snipe the entry, you'd go down to a lower time frame. But I'm just showing examples of, how to read the oscillator. You can see money is starting to flow in because the bearishness, the money exit is starting to taper, going to the median. Volume is coming up. We're also getting a sharp uptick in the, what's it called? The RSI. And then what did we get? Bounce off a bullish order block here. It's both bearish and bullish at the same time, which means it's a strong bounce level. Despite what it says, it's gonna bounce, but we don't know if it's gonna, how high it's gonna bounce, right? So I don't even really look at the money. I want to start incorporating the money flow. Sure, it works, but I found more success reading just these. So you can see what happens, right? Money's coming in, volume's going up. This is also, strength is coming up as well. The divergence, right? RSI, this low on price is lower than this low, but the divergence, the strength is coming in. It's lagging, but at the same time, it's showing you early signs, right? Early signs of a reversal, and that's what you're looking for. You're not looking for this. You want to start building a position within reason, not here. You don't want to build it there. You want to start paying attention. Mark your charts with reminders, alerts, flag it, do something to remember it. And I'll show you later how I do that. But this is how you identify moves based off of this oscillator. So, and you can see it printed hidden divergence. Boom, boom, right there. Meaning there's going to be this happening, right? We saw all these reversal signs. We got more divergence here. That wick is the higher high despite the strength being down here. Divergence, blue dot, overbought, possible reversal. We got this early, meaning a move's about to happen, but it didn't happen. That doesn't mean it's not going to happen. We got the sharp arrow down. We got a lot of good signs to show a reversal. And you dial down the lower time frames to snipe that entry, but we got the signs. And what happened? Boom. Same with here. Divergence again, double print, double bottom. Money isn't exiting, so it's worth looking for a long, but volume is coming up. And you can see the price is actually going up as well. So the more examples I cover in the last video, the more you'll be able to understand this indicator, but it's really fucking straightforward and it's so fucking accurate. This one's really self-explanatory. I just showed you. So that's the two that I use from Chart Prime. In confluence with other things, it's very, very, very powerful. And I'll show examples later of, like, with the replay mode, how I catch trades. Moving averages, I always have 3, and I lock them to the day chart. And how you do that? I have the 50 locked to the 1 day calculation time frame. The 50, the 100, same thing, locked to the day. Whoops. And the 200 locked to the day. All 3 locked to the day. And why do I have these? Why do I lock them to the day? Because I want to trade off of strong support zones. When you zoom into 4 hour and use something like EMAs, it's a lot of noise. I don't really use these that much, the EMAs, especially when on the only time I use these two is on the 1 hour for scalps and also for reversals. So when you look at that, things are looking pretty bullish on the 1 hour for Solana because I thought that was a moving average. I'm like, what the fuck's coming from the other way? It's actually a drawing. But anyways, you can see we're on a clear uptrend because we're spending most of the time above it. But when we're below, it's pretty bearish when it retests. But we're in a clear uptrend because we're above it. But it's only really meant for scalps. I'm experimenting with it, trying to find a good strategy with it. But the reason I like these is because these ones give you the good bounces, the daily moving averages. So, for example, holy fuck, it's so slow today. This area where the 100-day and the 200-day meet, I can expect a really good bounce. And when you pair it with something like a local fib, which we can draw two, we have a good area of confluence there. Take out what we don't need. And you see my charts, when I drop my charts sometimes on Telegram, they look like it just has these two, but I remove the ones that I don't need in my analysis. Template, hold. Anything? Yes, that one looks better. So we'll remove this one. And look what lines up perfectly. 382. So I like fib levels. I like to only take trades on fib levels. You want A plus setups, not B, or not like I think it's gonna work. You want to be confident in your setups, and the highest probability is off fib zones, fib levels. So when you look at this, what confluence do we have? We have horizontal support, 382, 100, and the 50-day moving average. Let's check a VWAP. Oh my god, this shit again. That's gonna drive me nuts. I use this thing all the time and I don't want to keep doing that. So you can see this cluster here. Wait, let's zoom in just to be a little more accurate. Oh my god, so slow today. What the hell? I find that on TradingView, during really volatile days, it's slow as fuck. I don't know, maybe everyone's looking at charts. Right here. See how it didn't plop it exactly on the low? Oh my god, it disappeared. Alright, there. Let's see what kind of confluence that gives us. So yeah, nice tight zone right here. It won't bounce exactly off of it. It might, but like I said, you catch trades. You don't just take them. You have to catch them. When you think of it like an egg, when you catch it, you want to like cushion into it, right? You want to catch it nicely, and that's like my idea when it comes to catching a trade. I ladder in. I have different ways to catch it. I ladder in, so I have like a small amount, medium-sized amount, and the meat of my capital at the bottom because it lowers your average. If you have everything all the same, like 100, 100, 100, your average doesn't get moved down by that much because by the time you hit the second 100, your position size is 20, 200, and your last one doesn't move it down that much because it's only a third of your position. I'll talk about that in another video, but yeah, that's the concept. So you can expect around here, all the confluence with everything that we see, that this is going to be a good reaction zone. Then you use what I'm going to teach you later on to nail that entry and how to catch it. So let's check let's delete this box because we know where we want to be looking. Put this, take out, put that. So yeah, you can see an order block around here as well on the 4 hour. So this area looks pretty good for a reaction zone. That's how I use all the indicators that I use to identify reaction zones. And I love moving averages because of that reason. They might be delayed, but I'm just using them to find support. I'm not looking to say, oh, we're going up now because of this. We've already been going up from here, and you have no signs to show that. I don't use it that way. I use it to identify where price can bounce. Right? And we found a nice cluster right here to look for a trade. And finish it off, that, and that. Let's see what this gives us. Yeah, really loose trend line, but I see like a reaction there, right? And it lines up with a trend. So price might even want to do this. Reject off there. React in the zone. Maybe deviate a bit. But there. I've identified this as an area to start fucking really paying attention, or ladder, have some limit orders or set some lurks to be like, when price is here, pay attention, I might want to long it. And setting limit orders is good in a bullish environment, but when like Black Swan can really fucking blow past that. So it really depends on the psychology of the market. Again, psychology, right? You got to think about the macro. You got to think about the psychology when you plan all your moves, because if Trump comes out, if he's talking tariffs like he is at this time of recording, if he's been threatening tariffs and you have an idea that something can happen, you're going to be a little more cautious, right? So again, it really depends on how the market's feeling. So that's how I use those indicators. I'm trying to think of anything else. Oh, Spaceman is another really good one. It's good for analyzing Bitcoin and other price. So let's look at the day. Month, quarter, and year are very good for support and resistance. Previous month low. And if you're scalping, for example, Bitcoin, you're on a lower time frame. Put a cleaner chart. It gives you ideas. Asia, I'm always talking about like Asia open, Asia low, Asia this. Asia always gets the best entries. So when we hit the Asia high and break past it, you can expect Asia is going to take profits on that. So for example, Asia open, Asia high, we're above it right now. So again, we're approaching a danger zone because I'll show it quickly, but USDT dominance is on support, high time frame, total 3, altcoin market cap, hitting resistance, deviating, but I'm expecting that. Bitcoin dominance at support, bouncing off support. So when you look at the Asia high, on a day like this with all those indicators or those charts showing that, and we're above the Asia high and in one of these, I don't even think that's a trend yet. We only have a trend is only a trend with 3 or more touches. The more touches, the better. So this is not confirmed. Well, we can start tracking it. But with Spaceman, It shows you a lot of useful stuff. Again, Asia high, if we're above it, you can see all the rejection because Asia gets the best entries. And if they entered and then we push past their high, we can expect during the Asia session that they're going to take profits and send the price down, right? So that's when you can start thinking, I'm going to start taking profits here. All right. So that's why this is also really useful. It's also really good for intraday scalping. I'll talk about that in another video because that's a completely different strategy. That's like creating the Asia Open to do what they do. Because if you've watched the markets enough, you'll know that the US session is reactive to what Asia does. It's been like that for a long time. When did that happen? I don't know. But that's just something that I've noticed, and I've also followed a lot of really good scalpers. That's what they all do, that, you know. So yeah, that's all the indicators that I use. I rarely ever use the volume. I just use that for confirmation to see, like, on a reversal, on a bounce zone, if I see volume is really coming in, I'm going to scale that position higher. Yeah, I think that's all I really use. But when you put them all together, it makes sense. But this thing, bread and butter, it's a paid indicator, so I don't know if you're gonna use it or copy my strategy and build off of it, but at the end, I hope you'll be able to see its value. Yep. On to the next.